Guys, good evening and welcome to Money Control. I'm Karunya Rao, and we're here today to give you a lowdown on the CPI numbers as well as the IIP data that has been released. Joining me in conversation is Dinesh Unnikrishnan. He tracks the macros very closely along with the banking sector. Dinesh, hi, thanks for joining in. If I look at the headline numbers, CPI is slumping to a 11-month low of 5.88% for the month gone by, which is November 2022. On the face of it, it looks like a very good number, very encouraging. Is it overall good for the market, or is it once again the low base effect kicking in?
Thank you, Karunya, for having me on the show. As you rightly said, it is a pleasant surprise this time. Nobody expected CPI to be below 6%. Most of the forecasts were over 6%. So in that sense, on the face of it, a less than 6% CPI headline figure after 10 consecutive months is certainly a good news. This will be a relief for RBI. But if you look closely, the fall in CPI in November is mostly because of a sharp fall in food inflation, which has fallen to 4.66% versus 7% in the previous month. So, and if you look at the other parts, mostly the core part of inflation, it remains sticky and high at 6.1%. This is exactly what RBI was highlighting in the last policy. Core inflation found place in the RBI discussions in the policy document in multiple times. So although the CPI has fallen below 6% after a long time, while it is a good news on the face of it, the high core inflation, which is still high and elevated, remains a concern.
Why is it important, if you can put things in perspective for our viewers, why is core inflation being elevated still concerning for us?
Yes. Let me explain. Core inflation is simply means the non-volatile parts of the inflation, non-food and non-oil. See, the food and food inflation is a highly volatile number which can vary month on month. That is the reason why the regulators don't put too much attention to the food inflation fluctuations. So, on the other hand, the core inflation that gives you a real sense about how steep is the rate hike, how what is the nature of the inflation. If the inflation has actually eased, that should reflect in the core part of the inflation, which is the which is the more important aspect of the overall inflation figures. So for policy formulation purpose, the MPC and the RBI is closely looking at core inflation as they explained in the last policy meeting. So till the time core inflation eases to below 6% or to more comfortable level, one shouldn't expect any significant course in the approach towards the rate hikes, as well as RBI's caution on the inflation.
Why is that? Because yes, on one hand, we are, we've come down quite a bit as far as the headline inflation is concerned. In fact, for the first time this year, it has come in below the 6% upper bound of RBI's tolerance band of 2 to 6%. But then again, the medium-term target of 4%, we're still way above that. So the way things are panning out, looks like we could tame inflation, at least, if we look at just the headline number, of course. How is RBI now going to react in the next coming months? Because we've seen some clear indication of softening rate hikes or a slightly dovish stance from the Fed Reserve. What about RBI back home now? Now that inflation looks like is coming under control and closer to the desired band, do you think from Feb onwards we could see some easing in the rate hike regime at all?
Yes, Karunya, you have raised some very valid points. But one must remember that the central bank typically gets the inflation data, a little early than what all of us see.
Sure.
They typically get the number a little earlier. So typically towards the end of month, RBI may not have the exact figure, but they have enough data resources to understand where is the inflation heading. So I assume that last policy, by the time they were sitting down to write the policy, policy document, they would have a fair idea of where the inflation is heading. So, if, despite that, we saw a 35 basis point, which I call a continuation of their hawkish stance on inflation.
Hmm.
We must see that RBI has got the inflation projection wrong far too many times in the past. uh, Even though RBI now says they got the Arjuna's eyes on inflation, and this is their primary task, etc. The fact is that RBI acted too late on inflation. The
Right.
CPI inflation has been over the target of 4% for nearly 3 years now. If I
Yeah.
remember correct, starting January 2020, inflation has been rising. So this is not something that happened in last 6 months for RBI to wake up and warrant a quick policy action back-to-back rate hikes. For some reason, the RBI has now woken up to the reality that they acted late, and they have to, they have to approach it in a much more intense fashion to tame inflation. So, having learned from from their failures, the gaps in the past, I really don't think that RBI will this time will be comfortable to lower their guard so soon. So
Okay.
my assumption is that in February we will see another rate hike. We have another inflation print coming up before the February policy, but the fair expectation is that the central bank will do one more rate hike and may post that, because
Hmm.
just 1 month of inflation data below 6% is not good enough for going by their past responses, past comments. It's not good enough for the central bank to to conclusively form an opinion on the inflation trajectory.
Okay. Dinesh, last month when the CPI numbers came, I was talking to our colleague Siddhi, and not just her, but even a lot of other economists had predicted inflation to remain in that 6.5% odd range for the next couple of months as well. But now we have eased, or now we have come in way below that. And if that does continue to happen, let's say if we do see these positive surprises in the next 1 or 2 months as well, does it mean that even the RBI could change their estimates for inflation, which is now at 6.7%? Last week, RBI governor had announced that projection. Could there be a revision, perhaps, if we continue to stay strong and on this trajectory of tapering inflation?
Yes, Karunya, the big catchword is if, as you said, because yeah,
Yeah,
so because RBI has consistently maintained that their policy actions will be data dependent, will be based on incoming data. So it's very hard to predict which way the CPI will move. Because, for instance, takes the November figures. Nobody was expecting inflation to fall below 6%. That is only because of the sharp fall in the food inflation numbers to, like I said, below 5% compared to 7% in the previous month. So yes, hypothetically speaking, if the inflation continue to be below 6% for next month, then there is a possibility that the MPC may pause in February. That is a possibility. But
hmm.
to be very frank, it's it's almost impossible to predict the inflation number just like what we have seen this month, and we'll have to wait for that. But I sincerely expect RBI not to lower the guard, to back up from the fight on inflation so soon, because of the fact that we must remember that they have just officially admitted their failure in keeping
Yeah,
their inflation mandate for the first time in history. That's
yeah,
a very big thing. MPC started functioning in 2016 March, if I remember correct. So in those 6 to 7 years, this is the first time the RBI has faced such an embarrassing situation, to for having to admit its failure before the government, before the public. We must remember that the first duty of the central bank is price stability, to keep the price stability of the economy while supporting growth. So technically, supporting growth comes later. So here we have seen the RBI-led MPC failing in its mandate. So I that should give some lesson. Secondly, if you go by the MPC minutes of the previous policies, there
Hmm.
has been comments, there has been strong opinions within the MPC members about, about the RBI's desired policy action. For instance, Jayant Verma is one of the very prominent voices in MPC. He has been arguing for very long that the MPC should not take the inflation fight with a light approach. Inflation is a far higher threat to the economy, a middle income economy like India, because it hurts poor. Because we have high unemployment, there are no huge wage increases, etc. Even when the economy grows at an average rate, say 6 to 7%, uh, the fruits of growth doesn't reach to the poor segments of the economy because of the high inflation, because they kept paying high while the income remained the same. So this is something which the Reserve Bank of India is directly responsible for. So, after such a great, gross failure in its mandate, it will be
Hmm.
sort of immature for the policymakers to suddenly look at easing or pausing with just 1 month's inflation figure. But yes,
Yeah.
as you rightly said, if the inflation continues to form a pattern below 6% in the next few months, then the RBI could probably rethink its rate stance.
Yeah, clearly, I mean, I'm sure it's going to be data driven. So we also, like the RBI, have to wait and
Yes,
watch what happens.
yes,
But
yes.
let's talk about the divergence between WPI and CPI, which seems to be lowering at this point in time. So how should people interpret that as a macro indicator?
So WPI is mostly the input prices, the wholesale prices that the economy,
Hmm.
but the issue is that this round of high inflation is not demand driven, it is supply driven.
Yeah.
That is the reason why the RBI has very limited tools to control this inflation. Because RBI, the monetary policy can act only on the demand side. They can either make the money costly by increasing the interest rates or cut the rates. So RBI has been, using the one single tool that they have all this while since May with the 225 basis point rate hike. But the issue is that this is the high inflation expectations remains very high at the retail level. So I do not personally put much focus on the divergence of WPI and CPI or the WPI numbers itself beyond one of the inputs for the overall scenario. Where we are really worried is how the retail prices are behaving. So this is where the last 10 months we have seen the inflation consistently above the upper tolerance band. Today's number for me is a real surprise, and the
Hmm.
reason is only because of the food inflation part. I really doubt whether we will consistently see this. We'll have to wait for the next month, and even when even if the inflation falls next month, RBI will be slightly hesitant to stop this rate hike course so soon. At this point, that's what my feeling is.
Okay. I also want to shift gears and talk about the IIP number as well, industrial
Yeah.
production, which is contracted in October and mainly weighed down by the manufacturing sector, which has contracted by 5.6%. Is it alarming?
Well, it's very improper to look at 1 month's IAP data,
Hmm.
because IAP is a very volatile figure. You need to see the pattern over a few months. Uh, and I haven't, to be frank, I haven't had a chance to look at the detailed numbers on IAP this time, so I wouldn't
Okay.
be able to comment further.
Okay. All right. Well, let's see how the markets also react, if at all, tomorrow to the positive surprise that we've seen on the headline CPI number, or they also be a little cautious and see how and whether or not it is a sustained trend. Thank you so much, Dinesh, for talking us through the fine print and what the data essentially means for the state of our economy. With that, it's a wrap, guys. Thank you for tuning in.
Thank you.